Or this is like asking a Twitch simp if he's gonna spend part of his stimulus on his favorite e-girl. Dude, Pokimane does not need your rent money again. Get over it. Hey everybody, Walrus here from Walrus Street, bringing you your news and earnings for the week of March 15th, 2021. Just a reminder, I am not a financial professional. All information in this video is for entertainment purposes only. That week finished brilliantly after the last couple weeks. The market just kind of recovered. It was a red Monday. Tuesday, Wednesday, Thursday, Friday, for the most part, market-wide was pretty darn green. There was even a bit of a tech bounce, so that was nice to see. Let's get into the news. If you're new to the channel, I do publish all of my technical analysis every week. This is my practice that I'm sharing with you guys. It's not the greatest, but I am consistent. I added in Shift, which I covered in my DD video last week. First story. This is the big one, obviously. The House passes the $1.9 trillion COVID relief bill, sends it to Biden to sign. The Democrats passed the package on Wednesday. Biden signed it on Friday. The plan includes unemployment aid, direct payments, tax credit expansions, vaccine distribution funds, state, local government relief, among a range of other provisions. None of this is surprising. We knew this was coming, but it's nice to have it finally done. And I heard people are going to be getting their stimulus payments as soon as this week. Hope they just dump them right back into the market. Hey, speaking of that, this is one of the dumbest news articles I've read in a long while. Young retail investors plan to spend almost half their stimulus checks on stocks, Deutsche Bank survey claims. An online survey of 430 investors who use online broker platforms found that half of respondents between 25 and 34 years old plan to spend 50% of their stimulus payments on stocks. No way! Retail investors are gonna spend their extra money on investments? How absurd. I never would have guessed. Walrus, what are you gonna do with your stimulus check? I thought I would just do a character 180 and spend this one on hookers and blow. This is absolutely ridiculous. This is like asking your friend Becky if she's gonna spend part of her stimulus on Starbucks and Lululemon leggings. Of course she is. Or this is like asking a Twitch simp if he's gonna spend part of his stimulus on his favorite e-girl. Dude, Pokimane does not need your rent money again. Get over it. The only notable aspect on this was the age group breakdown. The younger the person was, the higher the likelihood that they were going to spend the stimulus check on stocks. With the COVID relief bill passed, Biden prepares to stake his presidency and Democratic majorities on infrastructure. And this is something that Biden talked about while he was running his campaign, a $2 trillion infrastructure plan that aims to achieve carbon-free power generation by 2035, create millions of union jobs. Regardless of how you feel about this, it's probably going to happen because we do have the Democratic majority Congress, Senate, and the executive branch in Biden. I think this is wise, this is prudent to invest accordingly. For me, I'm invested in some steel companies, specifically Cleveland-Cliffs, because steel is necessary for nearly all infrastructure programs, and I think that they're most likely to benefit from something like this. That news broke on March 10th. If you take a look at the Cleveland-Cliffs graph, we actually had a break above the 50-day moving average on that news. And we've been below the 50-day moving average now for a couple of weeks, and that news ended up breaking it above. And after that news, we had a $1.40 gain for Cleveland-Cliffs, which was pretty substantial. So you could see like the immediate positivity. This was kind of a known fact that the COVID stimulus was the first priority, infrastructure was the next priority. So people are already starting to pile into steel as we get ready for that. Also this week, news release from the Bureau of Labor Statistics, the US Department of Labor. Once a month, they release the Consumer Price Index. So this is for February 2021. You can go to bls.gov and get this PDF yourself, you know, because reading 37 pages of how prices on goods incrementally changed is a real fun time for everyone. I just want to point out this last paragraph here. The All Items Index, all consumer goods, rose 1.7% for the 12 months ending February, a larger increase than the 1.4% reported for the period ending January. The index for all items, less food and energy, rose 1.3% over the last 12 months, which was a smaller increase than the 1.4% for the 12 months ending in January. So we actually had a decline of 0.1% there for the all goods index. The big gain though came in the food index rose 3.6% and the energy index increased 2.4% over the period. Over the same period, we had oil and gas prices rising, which could have contributed to the energy index, but I'm not exactly sure why food was rising unless it's transportation costs associated with it. But that's just speculation on my end. February, we saw a slight increase here in the percent change compared to January, but the total over the last year actually went down by 0.1%. The reason that I'm even showing you this is because it's yet more evidence that we're not in an inflationary period yet. This report is looked at for kind of evidence of current inflation at the consumer good level and how inflation is affecting normal people. So this report being more or less positive, this kind of allays inflation concerns for the time being and backs up what Jerome Powell's been saying for the last couple of weeks, that we might have inflation in the future, but we're okay right now. Couple of IPO stories. The first one, Roblox stock continues to climb as the market value tops $39 billion. What? Roblox is a online game platform. It generates money through microtransactions of its in-game currency called Robux. Roblox had a suggested price point of $45 a share. On the first day of trading, the stock shot up 54%, closing at $69. The stock climbed another 6.3% on Thursday, closing at $73.90. That thrust its market value to nearly $39.5 billion. This was a direct listing. Direct listing is what Palantir did last year, but this is the first direct listing of 2021. Now, I thought that valuation of Roblox was absolutely crazy, and you can see it's already kind of dying off, the hype around it. So we had the big debut, and then we had a pretty big follow-up the next day on the 11th, and since then it's just been sort of waning hour by hour. If you look at this area right here, this is the volume. So the first day, early, we had a lot of excitement. The second day, at the beginning of trading, we had a lot of excitement. But after that, not really much. And right now, I know this is the after hours order book, but if you take a look at the order book, nobody really wants to buy in right now. Once again, we're sitting at a market cap of $38.3 billion. And I thought this was insane because Roblox is a really old game. And I wanted to compare this to Electronic Arts, for example. EA has also adopted the microtransaction format. I hate it. I hate it so much. By the way, microtransaction has its own abbreviation now, MTX. So if you see MTX in terms of the e-commerce of games, MTX is microtransaction. I just learned that. EA has a market cap of $37.5 billion. EA has hundreds of titles under its belt, large established IPs, and it's valued less than Roblox, which has one IP under its belt, Roblox. I wanted to compare it to Activision Blizzard because I'm a big Blizzard fanboy, even though Blizzard is just a shell of its former self. A market cap of $72 billion for Activision Blizzard. So right now, as it stands, Roblox is about 55% the market cap of Activision Blizzard. If you don't follow gaming, you might be wondering why I'm even bringing up that comparison. Activision Blizzard has absolutely legendary IPs here. We've got World of Warcraft, Call of Duty, Diablo, Hearthstone, Overwatch. Candy Crush? What happened to StarCraft? My baby. They're neglecting StarCraft. It's a legendary franchise. By the way, this is the battle chest from like the year 2000. On the bottom, you could see year 2000 compliant, Y2K. It's a relic, like me. Candy Crush. The other big IPO we had this week is Coupang. Instead of showing you one of the Coupang articles, I actually want to direct you to a Reddit post. This is in R Stocks. The user Onions Are Gods ended up making this DD post. He pulled his sources from many different articles, and this is the most bullish DD I can imagine. Their net revenue for 2020 is up 12 billion, 90% over 2019. But let me counter this by saying in Korea, we have had a lot of lockdown restrictions, so most people had no choice except to order stuff online. The only reason I'm saying that is because that number might not actually be sustainable going into the future. It's impressive, but it might not be sustainable. Revenue loss decreasing year after year. They're still losing money. Originally, their IPO was supposed to be valued at $35 a share, and it jumped to 69. He made the joke too. Nice. Once it was available to trade. I find it really concerning that Coupang is still losing money in what is effectively one of the greatest countries in the world for e-commerce. South Korea has a higher smartphone usage percentage than any other country in the world. Last I saw a figure, and don't quote me on this, but it was somewhere around 95% of the population operates a smartphone. Also, South Korea has one of the top 10 largest economies in the world, and it has 50+ million people in it. That's like the population of the the state of California, except South Korea is the size of the state of Indiana. South Korea is a logistics dream for an e-commerce shipping company like Coupang, and yet Coupang still is not profitable. And people give the counter argument that Coupang is like the Amazon of South Korea, and I say that is patently untrue. And people model the Amazon growth rate to the Coupang growth rate, and they're like, oh, Amazon wasn't profitable in its first couple years. Please. Amazon had to build logistics centers all over the country, build an entire fleet and distribution centers that could span the massive size of America to get the goods from point A to point B. South Korea also has to have a fleet, but they don't need as many distribution centers, and they don't have to drive as far. They don't have the same transportation costs. I don't think that comparison, as far as the revenue loss comparison is concerned, is comparable at all. They highlight the eco-friendly packaging and the same-day dawn delivery. Being in Korea, I do want to let you guys know, I do use Coupang frequently. I probably get deliveries from them 3 or 4 times a week. And I use the dawn delivery, where if I order a product before midnight, it comes to my door before 7 a.m. the next morning. Doesn't really matter what the product is. If it's on their list of approved products, which is thousands of products, it comes by 7 a.m. the next morning. Also, they use eco-friendly packaging. Most of the packages come in a sleeve or a recyclable insulative cooler, and I can just unload the product in my house, put the recyclable packaging outside my door, and the driver will come by later and pick up the packaging. So they reuse it for multiple orders. It's very environmentally friendly, and I do like that aspect about them. So fast delivery, environmentally friendly as much as possible. Coupang is the 3rd largest employer in the country already, but it's having labor issues. Now, there's a ton of articles in Korean that I could find to explain this, but that would not help you guys as my audience. So I did find this one in English here. This was previous to their IPO. This person did a write-up summarizing their labor issues. Coupang has drawn scrutiny for the working conditions in its warehouse. Of major concerns, it's continued to run windowless warehouses even through COVID-19. Some employees have unionized, but Coupang says that unionization can hurt their business and it discourages it. One Coupang delivery driver was found dead in his single-room accommodation. His wife said the driver complained about his arduous job working in the early morning. As a follow-up measure, the Tech Bay Union, the delivery driver union, had press conferences in front of Coupang's headquarters and denounced the company's poor working environment. The guy that died was only earning about 2.8 million won a month. That's like $2,500 or so. Overall, Coupang delivery drivers' average workload last year was 6 days per week and 71 hours per week. The company's undergoing soaring industrial accidents. Here's another worker, 28-year-old employee, 28. He died of a heart attack after working 62 hours a week for Coupang leading up to his death. He had worked an average of 58 hours a week during his 16 months working at Coupang's fulfillment center. Many Coupang workers argue there's no heater to keep the temperature up in the winter, nor any air conditioner to reduce the heat during the summer. They also had to receive permission to go to the bathroom, while managers calculated their daily workload with UPH gadgets in real time. Wow, maybe the comparison to Amazon is fair. The delivery drivers just had their pay cut by about 20%. These aren't the delivery truck drivers, these are the Coupang Eats delivery drivers for their food. They are unionized, and after they unionized, Coupang cut their pay from 3,100 won to 2,500 won per delivery. So that's a 20% pay cut there. And this, again, was after the unionization. So you can see a trend here of how Coupang treats their workers. Again, let me stress, they're the 3rd largest employer in the country after Samsung and Hyundai. With this many labor disputes, you can only imagine that it's only a matter of time before something bad happens. What I think is going to happen with this company is it's going to cut into their bottom line, because now that Coupang has international attention being traded on a US exchange, the government is going to force them into workplace reform. That's going to cut into their bottom line, and it's going to be a long while before they're actually profitable. Also, something that I don't like about the comparison to Amazon, this is Naver.com. This is like the Google of Korea. Everybody uses Naver web search. This is the homepage for every single computer, basically. Let's say we search for something like a really common food item, mandu. Man, I type slowly in Korean. Mandu is just dumpling. And I'm going to come over here and go to shopping. This opens up a Naver shopping tab, and we're going to go to the price comparison here. Right away, you can see the prices on all of the e-commerce sellers of Bibigo Wanggyoja Mandu. Timon, which is another e-commerce provider. Then we've got Rice Nara or Foodholic being the next lowest. Here's Coupang right here. It's tied for 4th. Now, if we go to another item, we've got CJ Mall, we've got Makunchang, we've got G9, G-Market. G-Market is one of the largest e-commerce sellers. Next one down, we've got 11th Street. There's no Coupang here. No Coupang here. None. Here's Lotte. Here's another one. And it's not just Mandu. I could waste a bunch of time pulling up different products for you guys, and you would see the same thing again and again and again. There are many e-commerce options for Koreans, so I know Coupang has fast delivery, but other than that, you can get cheaper stuff on other e-commerce platforms, and it's almost all next day delivery. So maybe not dawn delivery, but it's still just one day delivery. I don't know. Look, I'm not a total bear on Coupang. My opinion is that when it was valued at $35 a share, that was a fair price for Coupang. Coming in at $49 a share right now, I don't think that's a fair price. I would be willing to invest in Coupang somewhere down around that $35 level because I do think they are growing quickly. I think their Rocket delivery service and their WOW membership are good products, and I think people like them. I just don't want to buy at the current valuation with all of the problems surrounding the company that people in America might not actually be aware of. Next story. Shift announces record revenue and unit sales in Q4 2020 with strong growth momentum for 2021. You guys know I covered Shift in my DD video last week, and I mentioned them as being an undervalued / growth play. I was anticipating a strong earnings report on Monday. They knocked it out of the park. Their guidance that they issued last quarter was directly in line with what happened this quarter. They achieved record revenue and units sold levels in the fourth quarter, year-over-year growth of 168% and 147% respectively. Their fourth quarter revenue recorded 73.4 million. The projections were 72 to 75, so we're almost smack dab in the middle of that range. Their total revenue grew in 2020 18%. They're not actually expecting a slowdown. They gave guidance already for Q1 2021, revenue in the range of 90 to 95 million. This is an increase of 200 to 207% year over year. And quarter on quarter, that's another 30% increase off the 73 million they just reported. Shift is poised for just absolutely monstrous growth. And if you take a look at their chart after the earnings report, they just shot up all week. Monday, it ended up dropping below $8 a share, but right now we're up over 10. So it had a 25% price per share increase just since the earnings on Monday, just since my video. I'm going to chalk this one up as a successful investment. I'm loving this company. I'm loving their financials. Let's take a look at the upcoming earnings for this week. This is definitely not a very exciting week. There's not too much I want to take a look at. On Monday after close, AccelerX, one of the pharmaceutical companies I'm invested in, is reporting. Honestly, I don't really care much about their revenue because they're not increasing their manufacturing efficiency until next year, Q1. What I am going to be looking at here is sales figures for Dasuvia, looking at higher adoption of Dasuvia than they've had in the past. Tuesday, we've got Fuel Cell, F-Cell, Hydrogen Power Company reporting. Also, we've got Lennar Homes Tuesday after close. Looking at one of the big home construction companies is a good idea to see where the housing market is in America. So this is the type of earnings report that a lot of people pay attention to. Whether or not they're trading the stock, a company like Lennar influences an entire industry. Wednesday, before open, we've got Cintas. This is a uniform manufacturer, and it typically correlates with the jobs market. Sundial. Meme company. Oh, Lordstown Motors on Wednesday. We have got to take a look at that one after that hit piece that came out this week. Thursday, FedEx should have another brilliant earnings report because they're going to have the holiday season lumped in. So that should pop pretty hard this week. Dollar General's been incredibly strong for a while now. I want to take a look at Nike because Nike has an interesting situation going on. All right, let's go into Webull. Nike. The reason that I want to talk about Nike here, this was a big coronavirus comeback. We're actually going to look at the financials first. And if you take a look at the revenue, obviously we had a big drop off. This was a 38% drop, but then it improved markedly. The last quarter they reported back in November, almost a 9% revenue gain. And if you look at their net income on the year, they're up 12% through COVID. And this is a consumer good, and some people would consider this to be a luxury consumer good. So at this earnings report here in September, we had an earnings beat off the expectation. It wasn't stellar, but it was a beat off the expectation. And the share price ended up just rocketing up from a high of 117. The next day, we ended up having a high of 130 the day after the earnings report. Then after the last earnings report, we also had a bit of a gap up here from a high of 141 to a high of 147. But since that point, Nike really hasn't done anything. So this is kind of like a lost quarter where for 3 months, Nike's share price after that earnings report hasn't done anything. We're sitting at $140 a share. The reason that I think think this is so incredible is because we're going to have all of the holiday sales coming in, giving shoes for the holidays, a nice new pair of walking shoes, running shoes. I'm expecting Nike's earnings report to be absolutely stellar, and we might actually finally break out of this $140 range. And if you take a look, you can actually already see it a little bit here with a reversal on the MACD, where the MACD is trending positive and the RSI still isn't at overbought territory. Let's take a look at Ride, Lordstown Motors, and there's a lot to unpack here. This is going to be the last one we look at today. I want to show you guys specifically what happened here between Thursday, Friday. Thursday, we closed at $17.71. Friday, we opened at $14. So what on earth happened to cause a drop of $3.71 between Thursday and Friday? Hindenburg Research released an absolute hilarious hit piece on Lordstown Motors. You might be wondering, who's Hindenburg Research? Is this like Citron and Melvin, the short sellers and hack research company that went after GameStop? No, my friend, Hindenburg Research is very legitimate. This is the same people who brought you a hit like Nikola, how to parlay an ocean of lies into a partnership with the largest auto OEM in America. That's right, Hindenburg Research is the company that wrote the gigantic expose on Nikola's gravity-assisted trucks. Also, it's important to note, Hindenburg Research doesn't actually open short positions on any of the companies they cover. Before you go out and say, oh, they're bears or something like that, they're not actually shorting these companies. They're providing the research. So somebody's probably paying them to do it, but this is their job. Now, this is hilarious unless you're invested in Lordstown, and then you might actually be crying and doubting your entire investment. But I would strongly recommend you guys go to this website and read this yourself, because I am not going to be able to cover the entire thing in this video. hindenburgresearch.com/Lordstown. Please go and check this out. You're going to just laugh at the stuff that at least they're claiming this company's gotten away with. So let's just read a couple of the points. I'm just going to kind of pick them randomly here. Lordstown is an electric vehicle SPAC with no revenue, no sellable product, which we believe has misled investors on both its demand and production capabilities. We know that. That's not super surprising. This is where it's interesting. The company has consistently pointed to its book of 100,000 pre-orders as proof of deep demand for the proposed EV truck. Our conversations with former employees, business partners, and an extensive document review show the company's orders are largely fictitious and used as a prop to raise capital and confer legitimacy. Oh, shit. For example, Lordstown recently announced a 14,000 truck deal from E Squared Energy, supposedly representing $735 million in sales. E Squared is based out of a small residential apartment in Texas that doesn't operate a vehicle fleet. Another 1,000 truck, $52.5 million order comes from a two-person startup that operates out of a Regus virtual office with a mailing address at a UPS store. We spoke with the owner, who acknowledged it won't actually order any vehicles, instead describing the pre-order as a mere marketing relationship. This is the best one. It's not the highest number, but it explains what's happening. Yet another firm that's supposedly set to buy 500 trucks from Lordstown told us the letters of interest are non-binding. It's not like you'd obligate yourself to a pre-order or that you would contractually bind yourself to buying this truck. That's not what they are. One company rep that committed to buy 40 trucks through Climb to Glory, which is a public relations company, said, "I'm not committed to anything, not to buying a single vehicle. I committed to consider buying vehicles. I'd have a lot of questions before I commit to anything." Others had similar remarks. The commitment of the size, 15 vehicles, is totally impossible. A representative of the city of Ravenna told us about the pre-order. We document numerous other customers that disclaim any intent to actually purchase the vehicles. Steve Burns, the Lordstown Motors CEO, has been on air peddling these numbers of pre-orders, these 100,000 truck pre-orders, as legitimacy, as they said here in the quotes, confer legitimacy, saying that there's public interest for the product, when Hindenburg here is coming out having interviewed the people that supposedly have these pre-orders, and these people are saying, oh, it's a marketing relationship, it's non-binding, and you've got companies making these pre-orders for entire fleets that are startups. I'm not going to say anything else here, but I want you guys to please go and read this entire research report on your own. Again, hindenburgresearch.com/Lordstown. This is an eye-opener. If you go to the news tab on Webull, it's a bloodbath right now. This is all from like 1 day ago. There's 25 stories here. Lordstown Motors alert. Did you lose your money on your investment? Contact Johnson Fisto regarding investigation. The company is going to be responding to the Hindenburg research report, so that's good. You know, maybe the company can explain all of this. Lordstown Motors investor alert, another investigation for securities fraud. We've got another one, an investigation of securities fraud from another firm. The list goes on, and the word that you keep seeing reported here is just mirage, mirage. Their order book is fictitious, it's smoke and mirrors, it's a mirage. This looks bad. I am not invested in Ride, I'm not invested in Lordstown Motors, and I'm not going to consider touching it, but I am going to be very interested to see the company's response. And I guarantee it's going to be issued very quickly because their earnings report is coming up this week. They need to explain this before the earnings report on Wednesday after hours. So I would expect the report to come out Monday, Tuesday, Wednesday. And, you know, I'm just going to kind of sit back with some popcorn and enjoy the show here because these are some serious accusations. Yeah. Well, that's it for me this week. I hope you guys enjoyed the news and earnings. This video is a little bit longer because I'm not releasing a DD video this week, and I wanted to look closely into Coupang, into Roblox, into the Lordstown Motors issue. Once again, there's no DD video this week, guys. I needed to give myself a break. I'm a little bit burned out. I did 5 of them in a row, and those things take me like 3 days to put together. So I hope you understand. Also, on Friday, I recorded an interview with Money Today News, which is a Korean cable economic channel. That is going to be released on air this week. It's going to be played on cable TV first, and then they're going to upload the clip to their YouTube channel, so I'll be sure to share it with you guys afterwards. If you're enjoying the content on the channel, please like the video, subscribe to the channel, and if you want to be alerted to all my content and as soon as it goes live, hit that notification bell. Also, if you want to support my channel and you're new to investing, consider checking out my Webull referral link below. I'm partnered with Webull. If you sign up for a new account, deposit $100, you get some free stock, I get some free stock, everybody wins. All right, guys, I hope you have a good week. I hope your investments are green. Thanks for stopping by.